Hi everyone, I'm Cici Ma, Managing Director of Grow and Sell Your Biz and the host of the Capital Raising Show. My hope is that by showcasing successful capital raises, you will understand how and where to raise capital and avoid making the same mistakes others have. We're very lucky to have here on the show Peter Leung. Peter is a global real estate investor, serial entrepreneur, private equity and angel investor. Peter creates passive income through partnerships and for his investors through real estate and has his own podcast called Investorpreneur. He's raised capital from investors from UK, Canada, US, and in Asia for ventures, business, and primarily real estate. Thanks. Hi, Peter. How are you?
I'm doing wonderful. Thank you for having me on the show.
No, thank you for coming onto the Capital Raising Show. Yeah, so first up, I imagine you would have done this many times, but what is your 30-second intro about, your enterprise? I am Peter Leung.
So we do, real estate primarily is our business. So we deploy capital working with investors on creating passive income. So we deploy for commercial product and around the world. So Tesco, Walmart, IKEA are some of the projects that we involved with and are tenants of ours. And we also, look for intergenerational product, which allows for us to get paid on tenancies over 10, 20, 30 years.
Wow, long-term investors. Yeah.
Correct.
So how has COVID-19 actually impacted your business?
COVID-19 has actually been very interesting to our business because we've had as a matter of fact, everything was going on track to be able to actually be one of the best years in 2020 and leading into 2021 with our funnel. So what ended up happening, COVID actually changed our views as to what type of product or what type of strategies that we want to deploy. And as a matter of fact, that's really been the pivotal change. So COVID's really modified our investment horizon and also modified the type of investments that we want to make, as we're very risk adverse as a strategy, as an organization.
Right. In what way? Has it lengthened your horizon, or has it made you more risk averse, or vice versa?
No, I don't think it's made us more risk adverse. We do something called risk adjusted returns. So what is the risk compared to what the returns potentially can be? And so from our standpoint, COVID actually is an opportunity that we, from an investment standpoint, that we actually love. So we grew first, of course, with the huge migration of immigrants to Canada and USA, which was one of our biggest booms in property. And then the second wave was Brexit, which we then did a lot of investments in the UK because of Brexit. So COVID is actually our third wave. We're now at 11 properties in the last 120 days that we've purchased. So from that standpoint, actually, it's a different type of growth. We capture upon the what is going on in the market in terms of what's every day happening. So with regards to COVID, we're actually able to find better product at a better discount than we were prior to COVID.
Yeah, that's right. So taking advantage of the current market situation, basically. Yeah, that's right. Thanks for that. I guess for our listeners, because this is a capital raising show, we're interested in your experiencing, your successful capital raises in the past. So, we heard that you have raised capital successfully in the past. Are you able to give us some, examples of where you've raised capital? Maybe, say if you raise capital in the UK, when and where you raise that capital? Is that for,
Sure. We can generally talk about that for sure. So in the UK, where we do a lot in central London. Right, obviously from the people who are interested in passive residual income, and a lot of them want to invest. So in this particular case, a lot of times we may raise capital from locals in UK and central London for projects that are in Canada or in international, or vice versa for projects that are up north in UK. So deploying for strategies that they may be comfortable with, or strategies that they may be familiar with in their local currency and jurisdiction. But also at the same time, we may be deploying for capital where some of our serial investors and entrepreneurs are looking at how to diversify that risk, or how to allow for a secondary source of income that isn't quite completely hedged to their currency. So we might do strategies of that nature to actually deploy for capital outside their current jurisdiction.
Okay. Is that as part of a particular fund, a real estate fund, or is it like you do it as an investing syndicate?
We don't do it as a fund at the moment. We've always, because of our strategies are typically on larger commercial properties, what we typically do is that we actually do an SPV in the UK or a specific corporation designed for that company or designed for that project. So from that basis, we may raise specifically for a Tesco's or a Walmart or anything of that nature, and we would put together a specific fund or a specific company just for that that particular project. Because of course, some of these projects can be quite lengthy in time in terms of after it being put together, being built, or vice versa, being tenanted, and then later on being a buy and hold that we will refinance. So from that standpoint, we don't do it in terms of a fund, but we do it from an intergenerational or at least a 5+ year type of standpoint.
Right. So who are your investors? This type of long-term investors tend to be, I understand, family offices or even, institutional investors. Are your investors in like that as well, or?
Yeah, we do have some, family offices for sure. That's our primary target. We have a lot of, people who are in the realms of high income, but not necessarily high asset rich. So we do have some of those investors as well. And we also do have some institutions, but institutions are more catered to specific products. So we would deliver certain strategies that really meet their target. And so that's more of a, not necessarily so along the capital raising side, but more of a service base or a consultancy base that we take from them, that we put together a fund specifically for them. But most of ours is going to be high income or high asset rich individuals or family offices that are looking for something for the longer term.
Are they mainly located around Hong Kong, or are they located in UK or USA? Are they, where are they located?
We're actually quite diverse. We probably have about 35% in Hong Kong or in Southeast Asia. That includes part of China as well. And then, of course, we also have the locals, which account for local regions. What we find is really interesting is that a lot of people want to deploy in things that they sort of have understanding on. So you'd have a lot of people in the UK deploying for UK. You have a lot of Canadians wanting to deploy for the Canadian market, as well as the US for the US market. So that's the interesting part when it comes to the variety. But I would say that overall, about 35% here in Hong Kong, about 30% in Canada. US, I don't do nearly as much raises for recently because their currency is certainly lower. So again, the currency valuations and the hedging that we take for our investors are something that we specialize in as well. So in the UK.
Yeah. So take, for example, a raise for Tesco. If you have a Tesco, what sort of value would you be talking about? Tesco's, they tend to be quite big, right, in terms of the land that's required. So building a Tesco would mean that you probably need a big piece of land. You've got to build a sort of, not just a big warehouse type, but it has to be something that sort of looks quite reasonable. So, higher in terms of the value of build as well. And I guess the good thing about it is you probably can enter into a very long-term lease with them, and therefore, the investor would have a quite secure return in that respect. So can you give us an example of one of these cases where you have a Tesco as a tenant? What sort of value are we talking about?
Right. So, I mean, there's Tesco's Express as well. So certainly there are smaller projects that we get into as well. So more of our recent one was about, so we needed to raise about $6 million worth of equity, 6 million pounds. And we do a project along that line, about 32 million was the last project that we had involvement with. So that's the typical size. I mean, it depends on what type of project that it's involved in, as well as, the amount of land that requires. Sometimes we use stratified or what we call, split title type of properties for the Tesco Express. So it really depends on the strategy when it comes to the type of tenant. So in this particular case, or in most cases, we would actually, because of our relationship that we already have with some of these organizations, we actually find the land or actually understand what they're looking for, what type of areas, or even do a analysis as to which areas they may be interested in. And from that, we reverse engineer and actually find them and pitch them a land proposition or a building proposition as well. So you're looking at the ranges. I think our smallest one is probably about 8 million pounds and upwards of 30 million.
Okay. So for a 30 million raise, for example, how long would it take you to raise from the beginning to, getting money transferred?
So on a 30 million, we're in the range, because we have a lot of investors that already invest with us. In the last propositions that we did that in just under 45 days.
Wow, that's pretty good. Yeah. So I guess there is a difference between real estate type investment and other business investments, because, business investments, because of the different industries, it could be a lot more tricky, but real estate is a lot more focused. And there are, specific investors that like real estate investment. I know people from Hong Kong, from China, Asian people love real estate. So as a general rule, is that right? Yeah.
It is, because they understand it.
Yeah.
Right. But I mean, Asians also understand. I mean, I've always said this, right? Asians understand three components, right? One, they understand business. Second, they understand stock and equities. And third, they understand real estate. And because of the nature of, where they are geographically located, they may trade a lot with China or Southeast Asia in terms of their active business. They may trade Asian equities, but real estate wise, they actually look at where they're going to be situated, where they're going to be. So if they're going to be moving to Canada or you moving to UK, they're going to be looking at local properties, but still doing a lot of the local trading in terms of their business in China or Southeast Asia.
So are you guys more focused on commercial rather than residential?
Yeah, we're definitely more commercially driven. So that's our main bread and butter. That's also what we like to cater to, because we like to create, I mean, of course, residential properties like multiplex or vice versa from that basis, or HMOs, or, fairly significant, larger size properties in that format in the UK, we'd be interested in, or multifamily residential. We'd also consider that to be along the lines of a commercial property venture.
Right. Say in an aged care facility with 130 beds, for example, do you consider that as commercial rather than residential?
Yeah.
Right.
Yeah,
understand. Actually, it's funny. I was in Hong Kong a few years back, and I was driving along the way to the bay, and I saw this really beautiful building on the left hand side, and the right hand side is the ocean. And then I saw it's actually an aged care facility. I think, oh my God, I want to retire to this place. Beautiful views,
Plenty of great oceanfront properties here, and senior care is a really big sector, right? So we do invest in the senior care. So we have Western Canada, where we have a 105 bed and a 65 bed assisted living. So, but we also, those are more joint ventures with operators. So we're more interested in the real estate partnership aspect of it, and a little bit less in the operation aspect of it. So we do look at opportunities along that line, and that's why investors love working with us, is because we look for the uniqueness where we're relatively nimble in terms of what we do. And that's why we're able to raise the capital we do, is because we're risk adverse. We don't do every type of project. We want projects that are relatively risk reverse and provides a longevity in terms of cash flow and structure. So that is that's our bread and butter. That's what we catered for.
Yeah. No, that's good. And I guess some of the developments here nowadays, you can, have over $100 million type development that is pretty high risk, isn't it? Because you don't know what's happening after that in terms of commercials. Now, because of the I guess the office building, there are, with COVID, a lot more people are staying home, working from home. So the future of office buildings are in a bit of, doubt at the moment, isn't it? Yeah. I don't know. What's your view on that?
Yeah. But so, I mean, certainly there in that you can put that in one retrospect, which is the risk has changed, right? The risk profile has changed, but at the same time, is the price adjusted, right?
Yep.
So if the price is adjusted, like for example, most of our strategies are catered to the AAA sector. In terms of Tesco's, Walmart, any of the tenants that we have, we're catering definitely to the international business. We're catering to the AAA tenancy. So from that end, actually, it's been good because it's actually risk adverse. And also, if we were to deploy in AAA assets in the office space, what we actually find is that in most of the markets around the world, certainly metropolitan cities, you're actually finding that the actual office vacancy was extremely low, right? Pre-COVID. And so from that standpoint, this actually, even at what we're looking at right now in terms of central London, we're looking at sort of Toronto, or if you're looking at Seattle or Vancouver, some of the markets I'm looking at, the vacancy is so low that this, just because of COVID, might bring it back to where there's a bit of an equilibrium. So it's definitely not necessarily spun to the point where it went from a sort of a tenant, like a landlord market, all of a sudden to a tenancy market. I don't know if we're actually going to see that that big swing. And when people move out of the if the unaffordability of the AAA office space moves out, you got the Bs that are going to fill in, right? Because as the price comes down, the Bs are going to move into the As. So it's actually the risk in our view is actually going to be in the C tenancies, or in locations that are not quite as good, but the price is still, because of the type of space that they're taking, or how much the space they're taking, we're finding that the Class C typical tenant are actually moving to Class B, and the B tenants are actually moving into Class A tenancies. So again, it depends, even though it's the same sort of area along the lines of office space or commercial tenancies, we're also finding that the AAAs are holding a whole lot better than the C the property in terms of rent as well.
Right, that's great. Yeah, good advice. Well, coming back to capital raising, we still keep on digressing. So when you did raise capital in UK or for Canada, etc., did you have any advice, or maybe let's say lessons learned first? What did you have any lessons learned from whatever process that you were going through in getting those investment?
Sure. I mean, certainly along the way, we didn't start raising big money, right? So we raised very little capital at the very beginning, and it was always, from the beginning, it was friends and family, right? And it was friends and family, and then it extended to extended family and sort of extended friends, and then so it grew from that standpoint. So I would say, you know what, get in the flow of things, right? So don't always just raise big capital, and the fact that your friends and family and your acquaintances are getting involved actually is a really good thing, because that shows your character, your ability, also at the level of trust. So if you were starting to raise from external, depending on what level raising capital is, but I know that people listening on your show is serial entrepreneurs, but even starting small is okay, because that gives the solidified component of, hey, your friends, your family actually believe in what you do, and that is credibility. So at the end of the day, it's the branding, is the credibility that's going to help that. So for us, it's actually, my family, my extended family, that was investors of ours at the beginning, to the point where, we were getting introduced to other family offices, or even, and serial investors. So I would say start with friends and family, even though you go, oh, friends and family, they don't believe in what I do, etc. But the reality is they're the ones you need to be convinced of, in a way, is because that builds your trust and your credibility. When you tell an investor too, when I'm raising capital, well, my friends and family are involved in this deal, and my own money is involved in this deal. That's credibility, that's trust as well. So these little tidbits, certainly, I mean, I had to learn through the world of hard knocks, and it was from those things that you grow. That's probably one of the first things I say for anybody who's starting to raise capital. Despite it being difficult, friends and family are a great way to start.
Yeah, well, actually, that's in the venture world as well, in the technology world. The first round is always friends, family, and fools. That's, it's jokingly people are saying that. And we're talking about friends, family, and fools, and then whatever you can get money from the government, government grants and
Right.
stuff like that, and crowdfunding, angel funding, that.
And you brought up a really good one. Like right now with COVID, there's a lot of government grants. There's a lot
Yeah.
of government support. So this is a good time to actually raise from the government as well, proposals and everything else like that. I mean, actually, I'm involved in a couple where I'm advising from government of Hong Kong, where they are raising some substantial capital,
Right.
actually because of what's going on, and the support where the government is willing to support their venture on. So
yeah, because they want the economy to continue to not tank, which is
that's
very
right.
important. Yeah. So do you have any final advice for people or businesses wishing to raise capital for real estate development?
Well, I would say, regardless of real estate, I think that the core thing of that is have a very specific targeted niche, right? So look at who the demographic you want to raise capital from, and understand what they are all about, right? So early on, there was a time in my career where I was focusing on specifically dentistry, right? People who are dentists. And the reason for that, because we're buying a lot of dentist offices, right? Or we're buying, so we want to know everything about them, because from that standpoint, they understand that world. So dentists is obvious. Why we chose that, for example, was because dentists don't have time. They are usually stuck at work. They're trading time for money.
Yeah.
Some of them, sure, they might have their own.
They're paid quite well.
Well, they are quite well, but they don't have necessarily the enough time to look at other investments.
That's right.
Because of their time constraints. So they're there for long hours, or they have emergencies. So, I mean, they're paid well, but they also want to be able to deploy their capital. So from our standpoint, when we're looking to raising for the dentistry offices or dental offices, they became our primary target. So we need to understand what they're all about, what's their restrictions, what they find is meaningful in terms of return. Because of course they already make so much money. They're going, well, I don't want to make 5%. That does make no sense to me, right? So how safe is it for them? What is it that they're going to be interested in? What's their risk appetite? How long they want to invest in? Are they looking at, is there any tax solutions around how they can be, involved, and that can actually help their venture? Or could that be, do you use a SPV, or do you use a corporation? Do they fund it? How do they fund it? So I think everything around your target demographic, your niche of who you're raising for, and understanding what's important to them is always critical, regardless of real estate, right? Some people want to do real estate. Some people want to do VCs. I'm also on the flip side of investing with other people that are in the startup phase, or in seed round, or a Series A seed. So, from those standpoint, everybody's got a little bit differently. But I've realized from myself, being an investor in other people's project, that if they don't really understand what I'm looking for, then it's very hard for me to be able to fit into that type of opportunity, even though it might work very well, but something doesn't really quite fit. So how the structure is to the returns, to how long the project is deployed for, all that would play a role when you're working with investors. And I think for anybody raising capital out there, determine a couple of demographics that you really want to raise from. So it's not like, I want to raise money from anybody I approach, anybody I see, I'm gonna pitch. It's true, of course you should want to be, but the difficulty is that if you don't understand them, and if you don't understand that demographic or that type of character, it becomes harder for you to cater your investment strategy, or what you're doing towards this group of people.
They're very good. So basically, the right investors for the right investment, isn't it? You got to find the right match. Matching is really hard. Right. Peter, thank you so much for all your insights today. You've provided enormous value for our listeners.
Thank you for having me.
Much for listening. If you want to hear more about this topic or others, go to my website. As Sir Richard Branson said, learn to raise capital by any means necessary. So tune in again on the Capital Raising Show to hear another successful capital raising experience. Thank you again for listening.